very good afternoon. Welcome to another episode and another edition of Friday Drinks. Thank you very much for joining us in this warm African Zimbabwean sun. The weather has been fantastic. This is the first time we've been in the studio for, over 3-4 weeks, Mr. Producer. We've been doing a lot of work off-site. What are your thoughts and feelings about that?
Look, it just adds a different dimension to the show. I'm not complaining. It's good. It just means that there are more and more stakeholders who feel that they want to be associated with what we are doing. Obviously, it's normal for us to miss the studio because this is where we are used to. But we are grateful to our friends, colleagues who from time to time believe that we could enhance their gathering by being present.
Wow. Well, consequentially, it means that we run late when we're back in the studio. And,
no, that's the producer's fault. We're running an hour late.
You don't have to call out your bosses on being late. I remember when I was starting work, they were saying bosses are never late, but they're delayed.
Well, we have consumers and we have our audience.
Those are the ultimate bosses.
They're the ultimate bosses, and they've been waiting since...
my bosses here viewing, it's an unfortunate incident. It's technology. We were just trying to make things work for you. We still deliver the same good product that you've been waiting for. So thank you for so much for being patient with us. I will deal with these two boys when the show is off.
Rufaro, back in the studio.
Yeah,
what are your thoughts being outside of the studio and any nibbling ideas or thoughts?
It's fantastic to be back home. It's been good to be out and about and, see a bit of the country and what's happening outside Harare. It can be a bit of an echo chamber. So it's good actually to interact, especially I think the last one where we got to interact with a bunch of people from outside Zimbabwe. And we are much richer for those interactions.
What are your take homes? I mean, I think we've done about 3 conferences so far in just the last month.
So in about 6 weeks.
In about 6 weeks.
Look, I think our challenge, isn't that we don't have a rich brain trust from which to solve problems. I think, and it goes back to why we started doing this show in the first instance. That sometimes we just don't have the courage of our convictions to just call out some of the policy actions that we see here that aren't working. A lot of people are. When you have private conversations and you have conversations on the show, you can actually see people, water things down and become much more politically correct. But I think we're winning, we're making progress in terms of prodding people to be a bit more outspoken and to express themselves a bit more freely. I don't know what sense you got.
Well, I liked the interaction with the older folk, and especially the ones from outside of the country, and you sort of get the feeling that there's a lot of enthusiasm around Pan-Africanism and the future of Africa. And I think that's very encouraging, albeit it's very slow growth. I feel very strongly that Africa is growing at a slower rate. But
that's because it actually is growing at a slow rate for a continent with 62% of the world's poorest people.
Look, it's growing at 4%, which is the fastest growth we've had in a very long time. But I still think that it's still very slow.
Yeah, we're punching well below our weight.
Punching way below our weight. And I think that should really spur us into some sort of process that gets us going in the right track. I quite like actually your interview with the young CAs and their thoughts about their profession and where the profession is going. I thought that was more encouraging because I don't know whether I should say it's more encouraging, but that's the future of Africa. And unfortunately, I don't think they're going to stick around longer than the next 2-3 years. Yeah. They may not know it, but they're
do they have to?
No, they
don't. So I'm involved with our colleagues from my side, the CFA side, etc. My attitude has not been one where I am encouraging the younger folks to stick around. You just say, no, you should have this qualification, and then you can always do what you have to do with it. If it makes sense for you to stick around, then that's okay. But I think we have spoken about it quite at length on this show, that maybe with all this talent, the young age groups, maybe instead of hoping for them to stick around, we might as well export them. Yeah, so they need to be well educated. What pains me the most is what we tend to see playing out as xenophobic attacks, say in South Africa, and they tend to be targeting mostly people who are undocumented immigrants. So if you could have more and more of our guys being skilled, they go out there as documented immigrants into those countries, I think they are most likely to be well received and be able to make a positive contribution in the receiving countries, but also here back home. So because people will still move out, given the dynamics in our countries, isn't it better off to ship out a good product than a poor one?
Look, it's very good for them personally, but it's the reason why African growth is at 4%, because your skilled labor is moving out and it's being replaced by unskilled labor. And then
But aren't you guys just
where you create
aren't you guys just
the
talking about a
gap.
symptom to a problem, not the actual root cause?
No, no,
Africa is not
we-
poorer because we lack skills, or because skills are emigrating. Skills emigrate because Africa is poor and is continuing to be poor.
Yes, I was gonna add and say, that is the usual brain drain discussion that people have. I don't think we actually have got brain drain. Imagine if all those people.
Of course, we've got brain drain.
No, wait a minute.
hear
Let
him
me
out.
let me
Yes,
articulate my point. So the assumption is there are these brains, we need them, and they've got capacity to accommodate them. We don't have. So just imagine a situation where everyone who is out there had not gone out. What were you going to? I mean, what kind of way were you going to feed them in? So it's not like there's anyone who is really needed by the economic activity that's going out there, and they're just living a good good opportunities in Zimbabwe because they just feel that I just want to be outside. These are people that are underemployed when they're around. They're not being paid well. Some of them are not even employed. So when they actually decide to go out there to look for opportunities in areas where they can get the opportunities, how is that brain drain?
Okay, it is a brain drain because remember we've got push and pull factors. So the big problem we have is a lot of people wouldn't mind working in Zimbabwe and living in Zimbabwe. It's great weather, it's a great country, but a lot of them are being pushed out, right? A lot of that skill set is actually being pushed out. Ordinarily, it will be here and it will be contributing to what's actually happening in Zimbabwe. And it's the brain trust that you have. I mean, when you talk about innovation, you can't talk about innovation if you don't have the brain trust. And if that brain trust is moving out and you're continuously training, you can't be in training mode all the time.
I think we actually have to be in training mode all the time. That would be my argument to say, you know what, we have got the right age, maybe we have got educational systems, maybe let's empower them. Let's accept the reality for what it is. Let's train them, you see. And to the extent that our economy will start maybe demanding those services, those skill set, and be able to pay for them appropriately, they'll come back. I think where I tend to get a bit lost is when we seem to suggest that there are all these people that are living high-paying, lucrative contracts just to go outside. No, that's not the scenario. This is someone that is well-trained, that ordinarily in a perfect, or maybe there's nothing like a perfect market, but in a normal kind of market, they'll be able to establish themselves and be able to use their skill set. I remember a conversation. Wait. I remember a conversation with one of the guests that we met in Vic Falls, and I think it was Freeman, when it said he hasn't been in Zim for 15 years. And you asked him, he said something very profound. He says, out there are markets that give us trained, experienced people an opportunity to get to use what we got trained for. So imagine with those kind of impressive ideas that he was sharing with us about transport system. Do you think if he had stuck around in Zimbabwe, he was going to be at that level of knowledge and was even able to sort of apply those ones?
Nobody's actually saying that you should stick around.
Yeah.
In fact, I'm the one who's actually making the point.
So I'm just saying, don't call it brain drain. We are not draining anything.
No, it is a brain drain. I think.
No,
let's not take away from it.
Exactly. I think you're. If you take the expression brain drain at face value, right? It's you've got X number of brains, and on a net basis at the end of the year, do you have more of them or do you have less of them?
No. But if you look at it that way, it looks as if no.
Let's hear
Rufaro. I want to finish.
We'll come back to
I'll
you.
finish.
We'll come back
let
to
me
you.
finish
But
my point.
Let Rufaro
I want to say
finish his point.
the way you are putting it, you are looking at it as if it's negative. These people that are going out of the country, it's not negative. It's not like they've just decided to create chaos or
Ranga's not
whatever.
listening. We say it's positive for the individual, negative for the country.
It's actually positive for the country. How much?
Well, look. I think
how much remittances are we receiving?
that's a different debate, right? Whether brain drain is a positive thing or it's a negative thing, right? It's kind of like if you have an infection somewhere that needs to be drained, right? If we successfully drain it, that's a positive thing. Okay, but if we, sometimes when it can be negative, right? That's a different conversation.
We're talking about whether it's a net negative or a net positive for the country. So this is when you look at all the advantages and when you look at all the disadvantages. What is a brain drain? Brain drain is a net negative. And I can't believe that I'm having this discussion with esteemed, illustrious members of the
analyst
community, and we're debating on whether it's a positive.
I'm with you though.
No, I'm not
that
with
is why
him.
countries literally look for skilled labor.
Yeah.
The reason why they look for skilled labor is because it's a net positive in their economies.
Absolutely.
Right. And then now you're telling me that actually it's a net positive for the country where the skills are
leaving.
Are leaving.
So
come on, guys.
I think you're missing my point.
Yeah. Okay.
Do we have demand? Do we have demand?
I think
for
your point
these
is
skills?
missing.
No. Okay, maybe let's go through it maybe step by step.
Please
Yeah.
go ahead.
So I'm saying, do we have positions for these people? Like, are they areas where you're saying, you know what, we don't have enough of these skills, and yet we are able to pay appropriately for them? Or our situation is we have got excess skills for.
No, we've got excess lawyers, but we don't.
Why lawyers? Why lawyers?
Because you're a lawyer.
Stop hating.
We've done a skills gap.
Stop hating on the lawyers.
Gentlemen, we've done a skills gap in the country.
Yeah.
We don't have the necessary skills as far as STEM is concerned. We just don't have them. And if you look at the artisans and people with technical skills that have left the country, they've left a gaping hole in the country. And then when you look at the World Bank has done a fantastic report on labor productivity in the country. And labor productivity in Zimbabwe is one of the lowest in Africa.
Okay,
labor productivity is people with jobs, but their labor productivity is way lower than it is in the rest of Africa. And part of it is because they don't have the skill set. It's because we're in continuous training mode. We just don't have the skill set.
But let's put it this. There's another way to look at it that I think is relevant to this conversation, which is how is wealth created in the 21st century? In fact, and if you actually look at the last 500 years, how has wealth been created? It's when you have a melting pot of talented people who tinker, who are entrepreneurial, who build businesses and industries, and then they create wealth, and that part of the world thrives.
What's the assumption there?
So I mean, so if you go back, if we, in history, and you actually look at places that invented writing and that then built civilization, right? It's because they moved from hunter-gatherers, where people were widely dispersed, to agriculture, where population density increased, right? So the people actually have to stay in one place, collaborate. You have specialization, you have division of labor, you have increase in productivity, and then you build from there. So if you have an environment in which you have human capital that is on a net basis exiting, it basically means your capacity to build and grow is constrained.
I agree with you. But I think where we're missing each other is, let's accept that these people that are leaving, it's not because they are leaving lucrative positions. There are jobs for them. There are opportunities for them. Ordinarily, if they were, 600 lawyers graduating, right? The economy can absorb only 50. Are we better off with the other 550 in the country? Or is better for them to just go out? I know that maybe our courts will be, they would have this shortage of lawyers and whatever, but they don't have capacity to pay them. So are we better off with this other 550 just sticking around just so that we can fulfill this thing where we've got all the lawyers that we have trained here? Or maybe let them go out there, look for what makes sense to them. If we start having, because labor is a derived demand, right? We have got demand for these people. They'll come.
It's a chicken and egg game, though.
Yeah, they'll come.
It's not I'm actually quite surprised. I'm quite surprised.
You prefer all these engineers who be in Zimbabwe?
What did you put in Ranga's water? What is that water that you're drinking?
No, I think he's just being cantankerous because we said labor. Because it's human beings.
Just to prove Rufaro, it's water.
And what are you drinking today?
Okay. I'm having an iced tea. It's
without any ice in it.
Well, because we were an hour late, and this.
And I think our audience would love to know that Tinashe is already in summer mode, wearing some very colorful
checkered shorts.
Yeah, it's summer, so I'm getting ready for summer. Preparing myself.
Are you hitting the gym as well, or it's just the shorts?
No, it's just the shorts. Just the shorts.
Okay.
Yeah. And what are you having?
Yeah, I'm back to Scotch. I'm having this delightful and colorfully named Scotch called Pleasantly Puzzling, and it's the bottle's got some interesting notes on it: pineapple chunks, pears, pearl barley, mingle with waxy textures and seaside grasses in a sensory puzzle that both teases and delights.
My goodness!
And I can tell you from
all that just for the sake of getting drunk.
A lot of words for distilled water.
Well, it's not distilled water. It's distilled malt. And it's delightful. It's fantastic. It's really sad that you guys don't have a taste for this. And hopefully, over the years that we do this, I might persuade you once or twice to.
And before the show, Tinashe was making fun of my bracelets just to set the record straight. They're just bracelets.
Did you get them from Wenganga?
Where do you feel the need?
Do they have magical powers?
So I understand why Tinashe is a bit worried. Is because
you're from Chipinge?
No, of course I'm from Chipinge, right? No, but our last assignment in Vic Falls, we met quite a number of Afro-focused professionals from that philanthropic conference. I think most of them their outlook and everything was looking very, very African. So he thought maybe I'd join them.
Yeah, which is not necessarily a bad thing.
Look, it's not a bad thing, but this is especially...
it could have rubbed off.
I actually got this from my daughters, by the way.
Beautiful.
Yeah, when we went to this African shop selling bracelets, so each one of them, I was getting a bracelet, and then they thought I should have two. I actually like them. I'm not very... So there are not any religious connotation. I remember one of the people that interviewed, they were waxing lyrical about how some of the bracelets that they had were connected to this. No, there's no connection. Just something I can take it off. Decorative. I can just take it off anytime. Okay. It's more like my watch and this ring. Other ring.
Okay, all right.
But your ring is actually symbolic.
Yes.
Wow, I guess you're right. That is super special.
We had lots to discuss, but I think this is a fascinating discussion, and I think we should go down that rabbit hole. Primarily because we are actually in the studio.
Yeah,
and,
so we've got all the time in the world.
All the time in the world, and let's. So what I want us to do is just understand. Let's take away the word labor, because I know because it's human beings, and people get really apoplectic, primarily because it's human beings, right? And we're looking at human beings as instruments of capitalism, and I know you get worried, but I think there's something that we commonly understand, which is capital. If somebody says capital is moving from Zimbabwe and is moving to South Africa, and it's Zimbabweans who own this capital, is that a positive or a negative thing?
I'm agnostic.
I think it depends.
Is it a net positive or a net negative thing?
To who? Because remember,
To the country, not to the individual. To the individual, they've seen that South African is stable and higher interest rate, so they're moving their money, so they're net benefiting. There's no doubt about it. But to the country, is that a net negative or net positive if capital is moving out of the country? Citizens are taking their money and they're moving it out of the country. Is that a net positive or a net negative?
Because the expected return on investments or return on capital is much lower in Zim compared to other countries.
No, we don't care the reasons.
So
why
I think on a net basis, you are saying my citizens are better off. Ordinarily, you want that capital to stick around. Isn't that so?
Okay, I think you're just being cantankerous.
Huh?
Rufaro,
Look, all things being
capital was
equal.
sitting in Zimbabwe. Capital left Zimbabwe and it's now in South Africa. Is that a net negative or net positive for the country?
I'm agnostic. When it comes to capital, because it's really about returns from my perspective.
No,
Capital should go.
That's
Should
as
get.
far as the individual is concerned. I'm talking about the country. As far as the country is concerned,
Look,
is that a net negative or net positive?
All things being equal, it's a net negative, right? But
Why is it a net negative?
because assuming that capital returns are the same everywhere in the world, you'd rather that capital is deployed locally.
No.
Yeah.
Assuming that actually capital the returns are never equal.
Yeah, no,
assuming
that's
that
what I'm saying.
Returns were actually higher elsewhere.
Then we're better off investing elsewhere.
It's positive. It's positive because on a net basis, it means your citizens are able to realize a much better return.
Much better
capital.
much better income. Our GDP would
Exactly.
actually be higher
Would be
because we're
better.
getting more investment income.
Are you a socialist now, Tinashe? Are you
Okay.
advocating for the fact that capital has to stick around in your country because it's your country? It doesn't have to look for
advocates of
returns.
exchange control say, by the way. That's the reason why countries have
What has
exchange
happened to
control.
you? What are you drinking that?
To restrict capital flows.
No, my shock and awe
Yeah.
is if you guys cannot understand the basics and the thesis of economics, I'm very worried. Okay, gentlemen, it's very
For
simple.
us, it's common sense.
Yes.
I'm not looking at the individual. I'm looking at the country,
Yes.
right? And if a dollar remained in Zimbabwe and it was moving through the value chain, right? And it was engaged in production in Zimbabwe and it was giving a healthy return to an investor in Zimbabwe. If that dollar stayed in Zimbabwe, it's better for the country. If that dollar leaves the country, it's bad for the country.
No. But
you've changed your framing.
Exactly. You
Because
framed
you're
it
now
differently.
talking about the health return. So if the return in Zimbabwe is healthy, is better relative to other
Or even if
markets.
it's equal. If,
Yeah.
like say,
Then
which is why
it should
I
stick
qualified it and
around.
said if the return everywhere in the world is the
Yes.
same, then you want capital to
But-
stay in the country. But if, for example, the return in South Africa was 5 times the return in Zim, surely we're just better off shipping the money and then enjoying that higher return. Yes, no?
I'm shocked. That's all I can say.
Oh, okay, look at it.
I'm
look
not
at
going to
it.
argue
Okay.
because I think
No,
that
okay.
perhaps,
No, not Tinashe.
perhaps I'm not very good at articulating this.
Tinashe.
And
Maybe okay. Let's go specifically on labor because you have chosen to use the capital. It then sort of clouds some.
No, it's very simple
No,
and
no, it's not.
straightforward.
It's not simple. But look at it this way. So you've got all these institutions. They've churned out, say, aeronautical engineers, like 500 of them, here you're in Zimbabwe, but in Zimbabwe they've got just one, plane flying. So are you making the case that you're better off with these people in this country? In a situation where even the opportunity to sort of get to do what they're trained for is actually restricted, or maybe it's better for them to just, you only have a few that can still be accommodated, stick around, and those ones that can't get something, they go outside the country. They're getting more training.
Okay, Ranga.
They're earning money, which they're sending it back. So I think that's where we are missing each other.
I'm talking about the engineers, the 500 engineers that are currently employed today, right? But because of the economic situation in Zimbabwe, they leave the country. Those 500 leave the country. And because you're churning out new graduates, you're now training new engineers. So if you're Zimplat, you're continuously in training mode, because your engineers are leaving because of the country, the situation in the country. And I'm saying that's bad for the country. That's great for the individual, but people do not just, remember I said they're push and pull factors, right? So ordinarily in the 90s, it would be pull factors. So you're right, there's always an innovative engineer who decides, you know what, Zimbabwe is just too small a market for me. And they leave. And it's great for them and it's great for the country. But at a net basis, it's very, very important that you keep and retain skill set, because that's where your productivity, labor productivity, capital productivity, the minute it's lower, it means you can't hit those growth rates that you need. And you can't continuously be in training mode. Now, the things that we're talking about are very simple and straightforward if you look at it empirically. Silicon Valley has net inflows of labor and capital. And that's why it's the most innovative space in the world. And I'm saying Zimbabwe is losing labor, is losing capital, notwithstanding the reasons why that is happening. And I'm saying it's great for the individual. In fact, that's what they should do. That's why I said when we look at those CAs that you were chatting with, they may not realize it, but soon enough they'll be frustrated out of the country, which will be great for them, right? But it's not good for the company.
For the country.
Losing. Well, first of all, the company that's losing that skill set, because now they have to find someone else and then they have to train them. And then for that particular skill set to then eventually be productive, it takes, especially with technical skills, it takes 5-10 years for that skill set to be productive. And you can't be in a training mode as a country. That's all I'm saying, right? And remember, if we were innovative enough, we could absorb. It's not like we're training a lot of the engineers. We know that we graduating classes of engineers is what, probably 500 a year? That's small for a country of our size. That's actually small. But I do admit, it is true of lawyers. There are too many lawyers.
To my learned colleagues, if this guy ever comes suiting your services, just leave me alone.
So look, I want to come back to the capital question, and I want to use a hypothetical in a Zimbabwean context, which is an area where we know we destroyed a lot of capital locally, which is pension funds, right? Only recently, I think a couple of years ago, pension funds were given permission to invest, I think, up to 15% of their portfolio offshore. Now, imagine before 2008, 2009, imagine if it had always been the case since 1980 that pension funds could deploy capital wherever they thought it was clever. Okay? And imagine a parallel universe in which the pension funds, what they thought was in vogue was just to buy the S&P 500. Just, you get your pension receipts, ship it out, you buy the S&P 500, right? So you have an entire cohort of pensioners today who are either destitute or earning less than $100 a month from their pension. Imagine if they were earning thousands of dollars today because their pensions were worth millions, right? So the current scenario versus a scenario in which all of this capital was deployed outside the country, under which circumstance would Zimbabwe be better off?
The one where you just don't have hyperinflation.
No, but you're creating
No, see, that's the point. You're not understanding. Remember, capital to move out of the country, there are push and pull factors,
For sure.
right? And capital leaving or labor leaving, those are push factors. And push factors, it means if there's something that you have done wrong. That's why it's a push factor. It's not a pull factor. A pull factor is you've done absolutely nothing wrong. You've given capital a good return. You've given labor a good return. But on its own, it decides to diversify.
Yes.
Right? It says,
Yeah.
I'm not necessarily looking for a return, but I'm just saying it's important for me to just diversify my portfolio.
It's like the Norwegian sovereign fund, right?
Yeah.
Norway is actually doing quite well as a country, right? Can you now imagine if the portfolio manager of that wealth fund, if he had, if they had rules and regulations that said, hey, you can't deploy any of this capital outside Norway, right? Would Norway be better off?
Yes.
How?
Okay. Primarily because of push and pull factors. If capital is being pushed out, the problem is not capital.
No, it wasn't pushed out, right?
No, that's what I mean.
Fine, right?
Yeah. So everything. So then you don't need any regulation. That's the point I'm trying to make. Because you push me in a corner, and I'm saying actually it doesn't matter because as long as there's no regulation, capital will stay in Norway because it will find a return in Norway, and it will only go out as a pull factor to the extent that it just wants to diversify its risk.
But what if the returns are actually higher in Silicon Valley than in Norway?
Yes, and the way markets work, and this is the phenomenal thing about markets, is that actually the return in Norway will actually match per risk with what's happening in Silicon Valley. In fact, that's why for the longest, up until 2009, if you look at where S&P was and where the European index was, they were more or less in tandem up until 2009. Then you start seeing a gap. Why? It's because the risk premium in Europe just increased, primarily because of regulation, right? And I am saying, why is that for thousands of years? That risk premium wasn't there. That Norwegian money was quite comfortable staying in Europe. The reason why it was quite comfortable staying in Europe is because everybody is happy to see their country grow.
Yes, absolutely.
That's just the nature of things.
We all want our country to grow.
And any investment that is closer to home, closer to your eyes and ears, is probably a better investment than one that is far away.
Agreed.
Right? Yeah. So by the time you see someone taking their money, a pension fund saying, you know what, and the typical example is South Africa. You see a pension fund saying, you know what, I want to go further into China, or I want to go further. And it's not innovative. It's not entrepreneurial capital. It's really safe capital. It's primarily because of push factors. It's not pull factors. That's all I'm saying.
But it's Tinashe. But I don't think it's possible to have a market that could possibly have conditions where investors would not need to take their money out, because you also want to diversify. So diversification. So you might have your.
Scare wasn't listening.
No. No, I was listening, but you were making the case that no, look, it's possible in the case of Norway for them to be able to provide returns on a risky adjusted basis that are comparable. But it's not just that, but there's also diversification around whether it's geography or industries or whatever, because the industry in Norway cannot be similar to the one, say, in China, in the US or whatever. Even maybe when you just look at the return basis, the numbers are the same. So investors will always look for other things outside your jurisdiction. That has to be normal. You know, it doesn't have to be.
I think Rufaro got my argument. So I'm not going to make the argument. Rufaro, can you make my argument to Ranga?
I don't think he got anything.
No. So Tinashe's point is that, you know, look, and there's a circularness to it, which is basically that if Norway's regulatory and policy framework is ideal, the risk-adjusted rate of return in Norway will be identical to Silicon Valley or anywhere else that's producing fantastic returns.
But that's not possible, because it takes away innovation. It takes away the difference in the people, the difference in whether it's the system of innovating or creating new things or other things. So even if the environment is the same and everything, you need talent. Maybe the talent is just not there in Norway. Maybe it's not being properly managed in Norway or in other country. So it's not possible. I'm against I'm not quite agreeing with the idea that it's possible to create an environment that can provide you returns to a point that you don't need to go outside that jurisdiction. That just does not make sense. I mean, you can't be running a fund.
Okay, I said they push and pull factors, right? And I am saying that pull factors is what you're talking about.
Yes.
So
the attractiveness of
the destination. So Silicon Valley has got a pull factor.
Agreed.
Right? Because it's got an ecosystem and it's got capital, and primarily it's a pull factor for entrepreneurs, not even for capital, right? But entrepreneurs are the ones that
And
are actually,
capital as well.
Yeah, but a lot of the capital is already in America, right? But that's a pull factor. And we are saying actually on a risk-adjusted metric, Zimbabwe could compete for capital and entrepreneurs with Silicon Valley on a risk-adjusted. And this is true of the index. If you look at the index, the S&P, and you look at the Euro index, and you look at it over a 100-year period, is that it was on a risk-adjusted. It doesn't mean that S&P wasn't outperforming. It was. S&P was outperforming, but on a risk-adjusted measure, there was enough return in the local environment. Obviously, you have to account for buccaneers and entrepreneurs, people who see things differently, who think that, you know what, I think I can make money elsewhere. But when we look at push factors inherently tell us that there's something wrong in your country.
Certainly.
So when we see capital leaving, we now know if it's a push factor, there's something wrong. If in Europe, so we're not even theorizing, because this is actually what's happening in Europe.
Yep.
A lot of capital is leaving Europe, right? Is that a net good thing or a bad thing? Now, what you guys are saying, and maybe because we desensitize and we talk about Europe, maybe we can actually be more logical. What we're saying is, it's bad for Europe. Capital leaving Europe is bad for Europe. But is it good for the investment funds and for the individuals in Europe? Yes, it's good for them, right? Because number one, they're getting a better return. But number two, they're also market signaling to the European regulators, to European policymakers, that there's something fundamentally wrong.
Yeah, but that lot is numb. That's why Europe is the way it is.
Well, that's why capital will continuously move. And that's in fact, I thought you were going to pick this up with the Japanese carry.
Well, it's on our agenda, so we might as well move on.
We've
gone into this rabbit hole.
If you think about the Japanese thought they were clever. They reduced interest rate to near zero, and the economy is in the doldrum. And then people think, oh, okay, I will borrow yen and I'll invest elsewhere where there's a higher return.
Yeah.
Right? Up until the Japanese authority then decides, oh, maybe we need to increase interest rates.
Yeah, because of inflation, because they've got 3.6% inflation now.
And that's why
so 0% interest rates don't work.
They don't work. And the minute you do that, you start affecting the markets, because then the markets have to adjust by themselves. And that's all I'm saying, that they're push and pull factors. But anyway, let's get into that.
The Japanese carry trade.
Yeah.
And the way it almost unwound in a very spectacular fashion. So the Japanese central bank has pulled back on further interest rate hikes, but they only hiked interest rates by 25 basis points, 0.25%. So just to give a bit of background, basically, I think Tinashe alluded to this a little bit. Japan had 0% interest rates for the longest time. So basically, depositors or investors in Japan got pretty much nothing for sitting on their money. But everywhere else in the world, you had a real return. So U.S. Treasuries, recently you could get as high as 4%, 4.5%. But I think for the longest time you were getting 2%, 1.5%. You're getting, which is significantly higher than zero. So the Japanese carry trade is basically a trade where capital in Japan would put up security, borrow a lot of
not just in Japan. Around the world, people realize that you could borrow in Japan.
You borrow in yen, and then you convert those yen to US dollars or another hard currency, and then you buy an asset that just gives you a better yield. And because over time the yen was weakening against the world's major currencies, not only are you making a better return in the other asset that you're holding, when you have to pay back your loan, you need to buy less yen because the yen has weakened, and this has been a fantastic trade. There's basically about 20 trillion US dollars worth of assets worldwide that are funded by the Japanese carry trade. So unfortunately, Japan is starting to experience inflation. Surprise, surprise. And inflation's ticked up from pretty much 0 to 3.6% over the last 3-4 years. And so the Japanese central bank, the Bank of Japan, basically realized that this is going to be a problem, and the way to solve it is to increase interest rates. So they increased interest rates by 25 basis points last week, and everybody holding those 20 trillion assets raised an eyebrow and said, okay, this thing might need to reverse. And they started trying to sell these assets and close their positions, and you actually had like a 6% fall off in global equity markets. And but then the Bank of Japan has signaled that they are going to kick the can down the road and not
and the circus continues. But given that,
it reminds me of 2003. Is it 2003?
Yeah.
When our local banks were borrowing, going to the lend of last resort, picking up assets until the new governor came. And
we should have Gideon Gono on the show. I'd love to have. Could you make it happen?
Yeah, sure. Look, we would love
anyone who knows Gideon Gono, please give him a
governor.
shout. Your governor, that we would love to have a show with him, because I think we would like to take
understand the casino economy.
Yeah, and exactly what was happening during that period. And I think that was a fascinating period. So purely for historical and factual and pedagogical reasons, we would love to really understand what happened during that period. It was a fascinating period.
So I'd say a key takeaway, maybe speaking as a layperson.
Are you identifying as a layman in the world of business, finance, and banking?
I want to make my argument as a layman.
Okay.
Yeah.
Please do.
And given that we have spoken about the Japanese and also our former RBZ governor, Dr. Gono, is I think these policy tools, they have to be used appropriately. There is no need to put some even emotional considerations to it, because when you look at the Bank of England, the Fed, and
but haven't they also failed?
They failed, but I think the way they've gone about it, it's actually failure that you could see what they were trying to do. So it's possible.
Oh, they had good intentions, so
yes,
it's okay that they're failing.
Exactly. in the world of finance, it's possible that you can pursue a path and then it turns out not to give you the result that you wanted. But I'm not quite sure what in the case of say Japan here, keeping their interest rate close to zero, and maybe then just waking up overnight and say, you know what, let's just.
Do you know Friedrich Hayek's book, Roar?
Which one? He wrote a couple.
The more famous one.
Road to Serfdom. Yeah.
And what's the problem is the road to hell is
paved with good intentions.
Good intentions.
It's just like if you think about socialism / communism, right? Karl Marx wanted a prosperous, happier society, right? That's what he wanted. Yeah. It's not like he wanted people to suffer, right?
But I think so. This is the way I look at it, because I think Ranga raises a very good point, a very, 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 very good intervention there, to say, but it's not logical. Why are these guys doing this, right? And I think that the Bank of Japan certainly, the problem that they suffer is the political cost of raising interest rates, of doing the right thing. There's a point where, and I think that America is still there, Bank of England is still there, where they sometimes go overboard, and then they control themselves.
You think the Americans are doing the right thing?
Oh yeah.
No, I mean-
Raising interest rates, definitely. That's what the Fed should do. Reduce money supply, and I think but that does not take away that they did the wrong thing.
Yeah, because
4 years ago.
simultaneously, okay, so
So 4 years ago they did the wrong thing, and then now they're sort of correcting the wrong that they did. But right, when you get to Zimbabwe or Bank of Japan, is where you go overboard, and you can't control it anymore. Right? It's like Chikwambo. You think you can control it. You think you can control it, and I think at some point you can, right? And then you go overboard. And when you go overboard, you can't control it anymore. And that's where you have a 30-year, stagnation in Japan. It's because they overdid it in the 70s and 80s. And now they just caught in that problem that they have. And when they want to do the right thing, unfortunately, the political cost is just too much. Until you get, our good friend in Argentina Milei coming in and saying, "Okay, I'm going to stop this," and then he starts doing the right thing.
brings the chainsaw.
Exactly, and it is at a huge political cost, and
No,
unfortunately,
but it's just as
a lot of
popular as when you
people-
got elected, in
Yeah,
spite
yeah.
of the pain.
But then look at it. You're electing a guy after 50 years of
Mismanagement.
and that's what we're going to see in Japan. I think eventually they'll get it right. I still think that America, they've got some sort of control.
Yeah,
Don't go over.
they're increasing their debt by $1 trillion every 100 days.
It's a problem. So take it from me, as a libertarian, I still think that there's a huge problem there. But they're relatively better than everyone else, than every other central bank. Well, maybe Switzerland is a good
And
central
Singapore
bank.
with its currency
Singapore,
board.
Hong Kong, those are good central bankers. But outside of those, I think that the Fed have done a better job than the Europeans and everywhere else around. But let's come local, and let's talk about what's actually happening in Zimbabwe. The rate, we hear all sorts of things. Ranga, please inform us. What's happening?
I only just know the official rate. Yeah.
No, let's talk about what we hear.
Okay. Yeah.
What we hear.
To put it out there, I only know the official rate, 13.7. Thereabout. What I'm hearing is the rate out there is actually way above that. It's probably twice. It's approaching maybe 24 already, and it doesn't look like it's that trend is gonna abate anytime soon. The worrying thing is businesses are still failing to get allocated enough or most of what they are applying for through the banks. So the currency in the formal sector, it's difficult to get the USD from the bank. So economic players obviously are just resorting to going to the black market. And you see, it always happens whenever there is some big amounts of liquidity that's poured onto the market, the rate runs. And the next thing, the kind of reaction that you see is maybe more people getting arrested and so on. So it looks like, and another trend that also I would want to just talk about is what's happening in the shops. So the shops have already started adjusting their prices.
Oh, really?
Yes. So like they were doing during the bonds ZWL time. So where you are playing around with the USD price, so that effectively you can still show a certain Zim dollar number, but you don't get hit. Because what was now happening was, as the rate was...
So are you saying that the Zim dollar prices have gone up? Or
the USD prices
USD prices have
gone up, yeah.
Okay.
Yeah.
But effectively still cheaper to pay in ZiG.
So if they... Probably not, because if this thing was $2 USD at 13.7, it's now $5 USD. Even if you say it's still
But
at
if I pay in
13.7.
ZiG, so if I have my US dollars, then I go on I go elsewhere. What we hear is you have your US dollars, you change them elsewhere, and then you go back into the supermarket and you pay.
No, so the prices have gone up.
So in Zig
in
also,
Zig as well.
In Zig,
Yes.
they've gone up.
Yeah.
Is that factual?
It is.
this
It is.
true?
Yeah. I actually destroy in the supermarkets.
Okay,
this
so
week.
Zig prices have started.
Yeah,
creeping
USD
up.
Zig prices generally things have gone up, and the others have gone to a point where they are limiting the amount of Zig that you can spend in the supermarket.
So what you can actually purchase.
Yeah, exactly. So it's actually quite fun. There's this shop where the limit was about 300 Zig. When I went back, it was 5. When I went back, because the rate had gone up and things like that, they'd increased it to 500. But effectively,
It's the
In
same
real terms,
good-
it's the same amount of money.
the same
Really?
amount. Yeah.
Is that your experience? You see, that's why we need Ranga, because he's got the facts on the ground. I didn't know I didn't know this.
That was my experience. I mean, I remember remarking to Ranga, I think a few weeks ago, I was amazed that for the first time in the longest time, if you looked at the Zig price of imported items, they were actually cheaper than the price of similar items in South Africa, which is remarkable. And either the supermarkets were going to increase their Zig prices, or they were just going to fail to replace those items. And I think they've they're alive to the value destruction on their balance sheets of this huge gap between the official rate and the power market rate, and they've increased the Zig prices. So, I mean, it's a problem. I think, it's worth our while to dwell a little bit on what signal we are getting from a power market rate that is at 23, 24, right? Because if you have a functional formal banking system and currency that's interchangeable at a free market rate, why would anybody in their right mind pay 23 for a US dollar that they can buy 13.7, right?
Well, maybe because it's actually not there.
Exactly.
When you walk into
so
a bank,
and if the willing buyer, willing seller rate in the banks is actually a legitimate willing buyer, willing seller, why aren't legitimate buyers bidding up the currency? Why aren't they going to their bank and saying, hey, you know what? You can't find me any.
maybe you can
any money
answer it for us. That's a good question.
You can't find any money at 13.7. I'm willing to pay 14. I'm willing to pay 15.
So
the reality is that it's not a willing buyer, willing seller market. It's a managed exchange rate, just like the auction rate was a managed exchange rate, even though we were told that it was a willing buyer, willing seller market, right? And the currency is not there at 13.7, because not only are you paying significantly more if you're trading on the power market and paying 23, 24, you risk being arrested. You risk having your bank account suspended, right? So the only rational reason why people would go to a place where they're paying almost double and risk being arrested is because they're desperate to trade, right? And so what it speaks to me is the fact that the Zig as an interchangeable currency has failed. It's not interchangeable to US dollars for the most part. And the path that the local currency before the 5th of April was on, where the local currency's market share was shrinking month on month, I think is the same path that Zig is on.
Why is the governor your friend? Why are they not responding? Why
I think
why are they allowing the situation to get out of hand?
That's a great question, and I don't have any good answers to that, to be honest. My best guess is that the bureaucracy is it's got very high inertia, so actually changing things is incredibly difficult. And
he promised us that he actually has the guts to change things, and if he had actually allowed the rate to creep up, then it wouldn't get to 24. That's the other reality.
Yeah, so I mean, that's the thing about the power market, right? Which and you're absolutely right. If you had the the nature of the power market, because it's a criminal market, right? It's been criminalized. You can literally be arrested. You can literally have your bank accounts frozen, right? So you don't get to post on social media that you're in the market for X amount of money at Y rate, right? So it's very murky. It's very opaque. People are trading in clicks of trust, right? So so the price discovery is actually quite poor, because if I were to ask you how much you think traded yesterday at 23, you'd have no idea, right? Because this is not reported anyway. Whereas if you could go online and you could see, what the trades were between pounds and US dollars, and what the average spread was, and so if this trading was happening through formal banking channels, chances are, because I think in the power market rate there's a risk premium, right? Ranga might have a better rate than Tinashe, but I might trust Tinashe more, so I'll trade at a higher rate with Tinashe. Whereas if all the trading was going through formal banking sector, you're not worried about a licensed bank. You're not pricing in counterparty risk. You're comfortable that if you walk into a licensed bank and you place a bid, they're going to perform, right? So you're very right. It's likely that the rate wouldn't be as high as 23 if it was trading freely through the formal sector. And the other huge thing where we're getting it horribly wrong as a country, and we're missing out in a big way, is because we don't have an efficient price discovery mechanism in the formal channels. Some guy sitting in Joburg or London, right, who hears that there are microfinance businesses that are lending at 5% a month and finds that quite an exciting opportunity, right? He's not going to actually ship his money through the formal banking channel to participate in that opportunity because he doesn't trust it, right? Because it's got all these challenges. But in a system in which the money was moving freely, you'd have all this foreign capital actually looking to participate in some of the lucrative opportunities.
So maybe, Ranga, why? And Rufaro has done a fantastic job in just articulating this issue. I know we're running out of time, so I need you to articulate why this is not working. Like, why can they not hear this voice from the wilderness that, guys, open up the markets, let the rate be determined by the market, and actually it's better, we're better off, everybody's better off, the fiscus is better off, the central bank is better off, and the consumers and customers are better off.
Because we don't trust the markets. So there's always a fear that there is an invisible hand in the marketplace that is out to get the authorities. So, the distractors, the saboteurs, and, those kind of bad actors that are always seen or perceived to be in the market. So that's the biggest issue, and unfortunately we keep going down the same route, the same way that the previous currencies have gone is probably sadly the way that the ZIG is probably going, even if it's a structured currency. We've been making.
I think it's a currency that identifies as structured.
we've been making the case that we've been making the case that since it's a structured currency, all that needed to be done to instill some confidence in the marketplace was to make the US dollar available through the banking system. I would. I think if they just done that, even just with that 20% of that. Those reserves, they could have done a lot in terms of
pacifying the market.
Pacifying
okay,
the
so
market.
I know we are running out of time, and Ranga, this is for you. I want you to correctly contextualize.
Now I'm worried. Okay, that's fine.
And then we can expand. But first, because you're more versed in this, right? So, South African financial services firm Standard Bank Group Limited is abandoning hyperinflationary reporting for its local subsidiary Stanbic Bank, Zimbabwe, after adopting the greenback as the entity's reporting currency, despite the introduction of the new currency, Zimbabwean gold. We've seen Tanganda I think, again, raising an issue with EY, where they differed on hyperinflationary accounting, and they've decided to go with someone local who can understand what's actually happening in Zimbabwe. Please correctly contextualize the debate that's happening around hyperinflationary accounting and where we are.
I thought you'd give it to Rufaro as the accountant.
I'm more interested in Rufaro's critique, but I want you to contextualize it because you're in the marketplace,
yes,
and these are the issues, and you're dealing with the numbers. Then I want Rufaro to then critique it.
Okay, so I think the biggest dilemma has been the fact that there's what the international accounting standards allow on one side, and what the RBZ or the authorities through PAAB requires in terms of how to do the exchange rate. So, because we had a very robust debate at the conference asking the accountants why are they doing that, and they seem to say they're actually hamstrung by the authorities in the accounting fraternity, mostly the Public Accountants Board, in terms of what they can do with hyperinflation and adjustments. So, and because the accounting is always, there's always an element of judgment in terms of what you can and what you can do in terms of certain, adjustments you make. There's always a loophole. But from something which the accountants actually, a case they made, and I was sort of convinced, was they've got everything. The International Accounting Standard number 29, right, which they actually claim was authored mostly by Zimbabweans, because we in the recent history, we were the most affected by hyperinflation. He can properly account for the whatever in terms of how hyperinflation is going, but the biggest problem is they are hamstrung by regulation. So the number that you'd find, so there are certain things that you can't do in terms of what rate are you going to use, what exchange rate can you use. But I would say, I believe that businesses are better placed, or accountants are better placed. They should be able to communicate in a way that makes sense to them and also to users of the accounts.
So, Rufaro, I know your thoughts on this. You think it's just gibberish, but can you correctly contextualize it first from a technical perspective, and then critique what's the debate that's actually happening?
Yeah, look, I mean, those numbers are they're gibberish, right? I've been to a couple of analyst briefings where the finance director of the company presenting the numbers, when he or she puts the slide up with those numbers,
she giggles.
Says, look, I don't really understand these numbers myself, and then they quickly move on to other information that's more useful to analysts. So I think the challenge really is, there are things that are academic, and this is not just a Zimbabwean phenomenon, by the way. So one of the world's most successful and famous investors and business people, the Oracle of Omaha, Warren Buffett, there's certain things that he doesn't like in GAAP accounting, the generally accepted accounting practice, right, which he finds in running Berkshire Hathaway aren't actually useful in making decisions. So when he writes his shareholder letters, he doesn't, he talks about how he thinks about the business, the numbers that make sense to him, that help him, navigate the world and make decisions. So he's kind of allowing the shareholders and analysts to walk a mile in his shoes, right? And so when you read that shareholder letter, you can actually see, whether or not you agree with him.
But okay, I think you're running away from the question.
No. So the point I'm trying to make is
he's not having a debate with his auditors. The issue, and he's not having arguments with his auditors.
Yeah.
The issue is you're having companies that are listed having arguments with auditors around hyperinflationary accounting. Let's stick to that. Contextualize it for us.
So I think you guys are talking about Tanganda, which just changed the auditors. They moved away from EY and they got what was formerly Deloitte.
They explicitly gave us an idea of why.
They said they had a disagreement about technical issues.
Around
didn't actually go
hyperinflation
Right.
accounting.
They didn't go into the weeds of exactly what problem they had with EY, but also I think so. So the challenge that the big four franchises have, right? So which is EY, PricewaterhouseCoopers, Deloitte, and KPMG, right? Is that you've got partners in situ, right? That live and work in Zimbabwe, that actually understand what's happening here, and they're interacting with the client on an ongoing basis. And then you've got a compliance person, sitting in an office in another jurisdiction, whether it's Joburg or London or Dubai, right? That's reviewing, the work of the guys here and saying, well, we don't like this, and we don't like that, and you guys need to change this, and you guys need to change that, right? So I suspect very much, that this is why, the local partners of Deloitte actually abandoned the name and set out on their own. And it's not that Deloitte actually left the country; it's that the local partners felt so handicapped and hamstrung by having to tick the checklist from this office far away, manned by people who don't actually understand.
Ranka is saying, but the laws and the rules are pretty much the same globally.
No. So
that's what I want. That's why I wanted your critique.
It's kind of like I'll try and explain this by analogy, and think about perhaps why Stan Chartered and Barclays exited, right? It's because notwithstanding that you've got an excellent management team and board here on the ground in Zim, there's a guy sitting in Dubai or London who is second guessing everything that you're doing based on how they see the world globally, right? They don't have a sense for the issues that the board and management here is dealing with on a day-to-day basis. And eventually they just get fed up and say, no, actually this is too hard, just shut it down. Let's get out.
Well, I think that's a bad example, because I think a lot of it had to do with reputational risk, less about what was actually
What
happening.
reputational risk?
Well, Zim reputational risk affects the global brand. So what you tend to find with Barclays or with Standard Chartered, anything that happens in the local environment and Zim is flagged, eventually the global brand is also flagged. And they just think, from a reputational perspective, it's just too much effort.
I think you're being very charitable to those institutions.
Well, I used to be.
Okay, so you're biased.
So I'm just saying I've got insider information, and I think it's primarily reputational. They were quite happy in terms of employment. They'll be quite happy that they're actually employing people on the local ground, and that the business actually survives. But reputationally, especially if you're trying to sell the business, like what Barclays was trying to do, trying to sell to somebody, and somebody says, "But you're in Zim. I don't like this reputational risk. Please." Ring-fence or take it out. But that's not. Again, I want you to stick to the subject matter, because this is an area that only you can help us, right?
I'm not that special. Oh my gosh!
And
put on a pedestal.
You're finding a way to come into our turf.
You should get worried when Tinashe puts you in that kind of box. He's really trying to make life so difficult.
No, I'm actually saying
but look,
I had interesting debates with accountants, right? And I thought, wow, the flavor and the way they're looking at it is very, very interesting. And I just wanted
But the accountants are conflicted, right? I don't know whether you understand this.
That's the reason. We don't understand it. That's the reason why you're on the platform.
So
and you can help us.
So you could be the reporting accountant or the auditing or the auditors of a firm, and you could totally agree with Ranga that these inflation adjusted numbers have no utility, right?
Okay.
But you get paid more for reviewing them, and if right, and as happens in many of these companies, they don't actually have the technical expertise to prepare them, right? So they'll say, okay, fine.
According to Ranga, it doesn't matter.
They'll say so often they'll say, you know what, we've put them together up to this point. Can you guys review them? And to the extent that we've made errors and mistakes, please fix them and just bill us. Okay, so you've got a guy who understands that this whole exercise, nobody's actually going to use these inflation adjusted numbers. They're gibberish, but he gets paid more to work on them. So is that human being going to jump up and down and say, no, we should shut this down. We shouldn't bother with these numbers. Yeah, he's got this lovely conflict. And right? And how conflicts, like, and you're a banker, so you know these principal agent conflicts very well, right? So
and this is what I was trying to get out of this guy. Having heard what he has to say, which is brilliant, but my gosh, it took us 10 minutes
Forever.
just to get it out of
you
him.
were trying to push him onto the controversial corner.
No, it's not controversial.
This is
The
clear
more
as
reason
day.
why it should have happened 10 minutes ago, but there's this principal agent problem. There's a moral hazard that's there. You're in the analyst fraternity. How then do you reconcile this conflict that's actually happening between management and auditors? How do you then, when you look at the accounts and then you're trying to analyze them and make sense of it, and there's an inherent conflict or moral hazard, how do you assess it?
Well, it just tells you that as an analyst, you don't have to take everything that's presented in the financial as the gospel truth, even if it's audited. Because, precisely what Rufaro has said, an auditor is in the pocket of the management. It's the management who pays them at the end of the day. If you decide to differ, to voice your concerns, you end up like EY without a job. You get fired.
Again, on you. Are you saying that there's no ethical principle around auditing, or it's sort of you can weave your way around it?
Look, I think the profession. If we had somebody from the profession sitting with us, they would be jumping up and down and making the point 6 ways to Sunday that ethics is
at the core
of what they do, and they will just go to town about how to pass exams to be an accountant and auditor. There's all this ethical material and there's all these ethical standards, and they will yes, that's true, and to be fair to them, I'll concede that point. But what is equally true is the fact that the accountants and audit firms are paid by their clients. They're not paid by an independent third party who wants what's best for shareholders. They are paid by the boards and managements of companies. And, so you can have the highest integrity human beings on the planet, but incentives drive outcomes, right? This is just another factor of human nature.
So, as an investing public, we've heard from the accountant. Now, from our perspective, then we look at you as the chartered financial analyst and say, well, why you're supposed to then make sense of this, and you've got a higher ethical principle than the accountants. Please explain to us where your ethics
does he though?
start and end.
Does he have a higher ethical?
That's what we want to understand. Please share with us where your ethics start and end.
So look,
who pays you, by the way?
I think the starting point is every profession must have some sort of code of ethics. So it goes without saying. Whether you're an accountant, you're a CFA charter holder, you are a lawyer, a medical practitioner, or whatever. But obviously, right on the ground, there are relationships, and all these are business relationships. Client, service provider,
Someone's
principal
getting paid,
agent,
basically.
Exactly. So I think it's actually a very, very fine line. Very, very fragile kind of situation that has to be managed. So obviously, us as analysts, when you look at those numbers, my first instinct actually when I'm seeing the numbers is or should be, what is it that management are trying to hide? you know. And because I believe that you are not going to be told the entire story. So part of my job is actually to dig. So I'm just looking at the numbers.
To unravel the truth.
Yeah, I'm looking at the numbers. I'm looking at the narratives. I'm looking at the things that are happening around. So that I try and reduce the margin of error. I'm not going to get it 100%, but at least I should be able to.
You know the fable of the dog that didn't bark from Sherlock Holmes. You know,
and specifically, you and Faro would know that it's always a very difficult job for analysts. It's not only a Zimbabwean problem, but
it's globally.
Yeah. So globally, if they think that Tinashe Anotaurisa or is asking difficult questions, they will not invite you to their analyst calls or what they call conferences or whatever. And I think also locally it happens also from time to time where management.
Well, you've been a victim.
Yes,
numerous times.
Ranga's been kicked out of analyst briefings.
Yeah,
and even the world's best, top entrepreneurs. I remember listening to an earnings call where, it was the Tesla earnings call, and one of the analysts asked a question that just rubbed Elon the wrong way. And he said, dumb boneheaded questions aren't welcome. Next.
And it's worse. I mean, we are sell side guys. We are brokers, right? So our day-to-day job is to trade execution and all. So at the end of the day, this company is also my client or they're influential. So now, you are torn in between in terms of, okay, what objective do you want to advance?
So from your ethical perspective, then, how do you reconcile the conflict?
From an ethical perspective, so usually from analysts, they say, if you are not sure, you have got questions about this particular security issuer, don't make a recommendation.
So you leave it blank?
Yeah, I won't recommend.
Don't cover them.
I can cover them. I just produce an information memorandum. This is Kamba so and so. This is their manager. They've got this factory, or these are the numbers. What I can do is I can get into the numbers, but I can't start saying it's a good buy or a good sell or this is why they're good or whatever. Okay. Because I've got my issues around them. So the moment an analyst does that to a company, that's the closer that they can to pointing to the public to say, you know what, be careful.
Well,
which is why the best buy side guys. So for the benefit of the audience, the buy side is usually people who are managing money, and the sell side are the brokers who, one day his client is somebody selling shares, the next day it's somebody buying shares. And in the world today, the world's best fund managers, your Warren Buffetts, they actually don't read sell side research; they do their own.
Yeah. Well, I was going to say that, we've heard from the accountant and from the analyst, and we've heard serious debate around ethical questions. And I think that for the public and for the audience, it would be good if we can just raise the level of discourse and tell us exactly what you guys think, especially if you're an accountant or you're an analyst, because I think these are relevant questions in today's marketplace in Zimbabwe and also globally.
Before you go, it's a small market. People don't forget, Some of us are still paying for the sins that we committed more than
20 years ago.
Exactly. Just because we called out someone. And see, it's interesting. Some of the more honest guys would come to me and say, "No, Ranga, you were spot on. But was Taurisa Pachaunga, Then there was some other brother, senior of mine, we met later after they'd left. Ranga, not was that Pepe. I told Taura Chokwadi. The issue that we're raising was. So, but over the years, then with maturity, I also then learned to, like as a young, vibrant analyst, you wanted to do that in the public, and doing to the gallery. Later, I then learned I would just go after the meeting and say, "No, Tinashe, I heard everything that you said, but you were lying." Like, 1, 2, 3. Like, yeah, you're very right. Come to my office tomorrow. And then it then sort of helped me to start having a relationship with them. your question is going to be, so what does it say to your ethics? My ethics, I think the way I would guard them is I would never put my name out there and say this is if I've got doubts. But also, I also then learn to say I could not then rubbish something, even if it deserves to be what?
Rubbished.
Exactly.
Okay. Well, my view is actually different from both your views, actually.
Well, okay. What is your view? I'm curious.
I actually believe in the market, that we don't have this information asymmetry naturally in the marketplace. But I think that over time, we get to understand just so whether it's stock or it's property or any asset class, the market knows best. And the market is the ethic. The ethic is in the market itself. That people will trade and they will buy and sell. They will, over time, over the long term, the market actually gives us the
So
correct
to paraphrase Warren Buffett,
position.
what he says is, in the short term, the market is a voting machine. In the long term, it's a weighing machine. So it actually tells you where the value is in the long term.
In the
In
long
the short
term,
term, it
so-
just tells you what the mood is.
Yeah, exactly. And I think that what you guys have articulated very well, and you helped us understand, especially for the youngsters that are coming up, because these are some of the issues that they deal with, especially from the ethics perspective. And you guys have been able to actually articulate it very well, some of the challenges that analysts or accountants have. And the natural moral hazards or conflict of interest that are inherent in the marketplace. That's why I then take the position that I really don't care what your ethical position is. I don't care, Ranga, and where, the pedestal in which you sit or stand as far as ethics is concerned. It's not about you, and I actually don't care. But what I know is over time, has Ranga made the right calls or made the wrong calls?
Yeah, but there's also a
So-
good heuristic to use if in the short term, because sometimes it's you need to make a decision today, and you don't have the luxury of waiting to see how things are going to pan out over the long term. Nassim Taleb, one of my favorite analysts, has this wonderful heuristic, which is it's skin in the game, right? So
Yeah.
So don't ask your stockbroker what you should be buying or selling. Just ask them what they have in their portfolio.
Well, if I ask you, we know we know what the outcome will be. But yeah, skin in the game is one, but that's again the market, right?
Yeah,
Because
yeah.
because I don't know, and you're never going to tell me the actual skin in the game that you, or the actual
Where you have skin in the
where
game.
you're skin in the game. But I can tell from the marketplace, right?
Yeah, yeah.
Over time, and that's why I'm saying even your own reputation, right?
Sure.
The calls, the good and the bad calls that you've made over time,
Absolutely.
makes me trust you. It's the marketplace of analysts, the marketplace of accountants. So what's actually happening in the accounting field, to me as a market analyst, I really don't care about whether it's local or international and their ethical position and the reputational risk that they're taking or not taking. What I know is over time, one is going to be proved right and one is going to be proved wrong. The market always knows. Market is always the best. Ladies and gentlemen, thank you very much. Have yourself a wonderful Friday and an enjoyable weekend. See you next week. Cheers.
Cheers.